Welcome back to Mortgage 101, your guide to home ownership with myself, Todd Vino, and our mortgage guru, Clinton Wilkins. Clinton, fire, right? I mean, my gosh, everybody's on edge right now about these fires.
I think the country's on fire.
Yeah, that's right. Yeah.
Newfoundland, fires.
Yeah, Moncton.
Moncton,
yeah.
Fires.
Miramichi.
Fires.
Yeah.
Not good.
Yeah, and the Bears Lake one this week was scary.
That was very scary.
Yeah.
That was too close to home.
Yeah, really scary.
That reminded me really of the fires here from when they were, what was that, 2 years ago?
Talon, 3 years ago, 2023.
3 years ago.
Yeah.
That was 2 years ago.
Yeah, 2 years ago, you're right.
Yeah, that was very bad.
Yeah.
That was very bad.
So insurance is obviously impacted by this because obviously there's the risk factor, right? I would think that insurance costs at some point need to be or not at some point, always need to be factored into some people's mortgage, right? Not what their budget,
but their housing costs, really.
Yeah, their housing costs. Yeah,
their operating costs of their home.
Yeah,
and insurance costs have been rising.
Yeah, exactly.
There's been a lot of claims here from floods and fires, and even the rates for auto insurance, they're very high.
Yeah.
They've increased a lot over the last couple of years.
Right.
Which is a problem. And when we're talking about inflation, it's not just gas and groceries. It's all these other tertiary things that really are impacting our budget on a day in and day out basis.
Right. I would think that construction, new home construction in particular, would be going up big time.
I think the cost of construction is very high from a labor perspective and a material perspective. I don't think the materials are as expensive as they were like really in that thick of COVID. Remember, they were just like insane, like drywall and lumber and just went like through the roof. I think they've renormalized. And I think having that supply chain and that kind of worked out has helped. But we're not out of the woods.
No.
When we're talking about, trade with the U.S., I think that a lot of the supply now, we've started sourcing these things from other places around the world. Yeah, sure. A lot of stuff is still coming from the U.S., but, the tariffs are a concern.
Okay, we've talked about new home construction before. It's not for everybody, right? It's clearly some people don't have the stomach for it.
It's not for the weak of heart.
Yeah, that's right.
And it's not for the people that are really on a tight time frame.
Yeah.
I think the builders are getting better again. But again, when the market is more balanced, it's easier for things to be, in a better place. I think the labor market is still very hot. And I don't think there's enough workers here to be able to support the demand.
Yeah.
And I think we could build more if we had more skilled trade.
So so you say it's not for the weak of heart. Explain why you say that.
One is cost, because overruns. But, buyers sometimes can't get out of their own way. I see the change orders that come through, the scope creep. People change their minds. And that's really where builders are making their money, I think.
What do you mean scope creep? What's that mean?
Like they're changing the whole scope of the project sometimes. And, they're adding things, deleting things. That's where the cost sometimes gets out of control.
Yeah. How does it work? How does the mortgage lending work? Because you obviously the builder wants the money. How does that work?
It's usually the majority of the ones that we get involved with right now today. I'm not saying forever, but today the majority of the ones that new construction that we get involved with are turnkey. So it's based on a contractual price. But then there's clauses in the contract that the builder can charge you more based on inflation or cost of goods or whatever, or change orders within the agreement. So people are choosing to change the cabinetry or change the flooring or change the heating system. I'm talking about they're getting into extreme changes now. But borrowers are changing things all the time. And sometimes I see 10%, 20% plus change orders compared to the purchase price.
Wow. Okay, so when it comes to red flags, perhaps with contractors, who to use, who not to use, what advice do you give? Because you hear horror stories sometimes about bad contractors, not to impugn.
And sometimes the big ones are bad ones. Let's be honest.
Is that right? Yeah.
The size doesn't necessarily matter when it comes to contractors. Yeah. I think it's talk to people that have received a product from them. Get some referrals. Check out their actual work. Because let me tell you, there are some big contractors, and I mean, we have 20, 30,000 clients that do some shoddy work. I'll be honest with you. I've heard the horror stories. And sometimes it's not necessarily the contractor. Sometimes it's the project manager doesn't get along with the realtor, doesn't get along with the buyer. And that creates a friction. And then their perception is, hey, this builder is not good. It could be a great builder, But again, it comes down to the people that you're dealing with every
Yeah.
single day.
Yeah.
So I think it's really about getting the feedback from people that they've done business with in the past.
Right.
I think a track record is very indicative of what will happen in the future.
Can somebody be their own general contractor?
I mean, in theory, they could, but probably
Yeah.
not doing the type of turnkey that we're talking about. They would
Yeah.
need a draw mortgage
Right.
in that case. We've actually paused doing draw mortgages the last couple of years, Todd.
Is that right? Why?
A lot of work.
Yeah.
It's a pain in the butt for borrowers, for the lenders. There's not very many lenders that will do a draw, specifically a self-build.
Mm-hmm.
We're going to be launching it again here in the fall, but the last couple of years, we basically said to anybody who wants to come and get a draw, we're not offering this.
Wow.
We're too busy.
Yeah.
We don't have enough manpower. We don't have enough time to be able to do it. And we were really just trying to keep our head above water.
Yeah.
We are going to relaunch a product with a few lenders in Nova Scotia and in New Brunswick starting in September. So that'll be my little teaser.
Okay. What do you mean? Give us a little more details. You can't just throw.
So
that
we
out
were not doing land loans. We were not doing draw financing for the last probably 2 years,
there. Yeah.
maybe 3 years.
Explain again for those listening what you mean by draw financing.
So draw financing means the contractor doesn't get paid at the end. They get paid in little bits.
Little increments based on the amount of work they did.
Correct.
Hence the work, because somebody's got to verify that work's been done.
It's a more costly type of financing. So when someone does turnkey, they're like, well, I don't want to pay transfer tax. I don't want to pay the builder a higher price. It usually probably works out to be the same, and the risk is then on the builder. That's why turnkeys are much more popular than draw financing, and that's why lenders don't want to do draw financing.
Yeah.
Because what happens, Todd, if you decide, hey, you're building a house, and you drop dead, the bank's left holding the bag
Yeah.
for a half-built house.
Yeah. Yeah.
Nobody wants that.
Right. Okay. So when it comes to how far in the future you're going to build, that matters, because the contractor is going to charge you a certain amount based on
Carrying costs.
exactly and what could potentially go up, right? Because they got to cover their butt.
Oh, they're hedging.
Yeah.
They're hedging.
Exactly.
And that's why contractors are building homes. They want to make money.
Yeah.
It's a business.
Yeah. What type of markup generally are you talking about for new builds?
I think these contractors are making like a minimum of like 10% overall.
10%
But-
markup.
But 10% isn't that much money when we're talking like one little thing goes wrong, that 10% gets eaten up really quick.
Right. Right.
Maybe some they're making 20%, some they're making 5%. Who knows?
Yeah.
But I think the average is probably about a 10% profit. But when we're talking about building $500,000-$600,000 homes, okay, that's $50,000-$60,000 a profit.
Yeah.
It's not that much.
Not that much when you think about the amount of risk that you're taking on.
Huge risk.
Yeah.
Huge risk.
Yeah.
And that's where people that want to do draw financing, they're like, oh, I want to save that $50,000, $60,000. Well, these builders are building every single day. You're building a house maybe once or twice or 3 times in your life.
Yeah.
Not sure. Like, what is your track record, even if you work in the industry,
Yeah.
about building a house start to
Yeah.
finish? I've seen so many builds go sideways.
Mm-hmm.
I've been involved with them myself, Todd, and I work in the industry.
Yeah.
Who would want to wrong me? It still happened.
Yeah.
You know what I mean? It still happened.
Yeah.
And I have a negative experience about building homes, and I built a couple.
Mm-hmm.
I would think twice before building another one. I'm not saying I will never do it,
Yeah.
but I will have to be I will take a sober second thought before I decide I'm building another house.
Mm.
And that's from someone who works in the industry,
Yeah.
and I'm dealing with builders and lenders and lawyers every single day.
So the builders must have, obviously they're carrying a lot of credit themselves, right?
Oh, 100%. Yeah,
Yeah.
they're building. They typically would have like a whole program with a lender to build maybe some spec, build some at this level. Oftentimes, they're getting their financing based on building turnkey. If they're doing a one-off draw financing, the borrower basically is the lender. The borrower is giving them a deposit.
Mm-hmm.
Once they get to one stage, giving them more money. Get to another stage, giving them more money. And typically the builder then would get credit from these sub-trades. So in terms of a draw financing, the contractors aren't holding that much credit.
Mm.
Most of the risk is on the homeowner.
Yeah.
And again, if something goes wrong with the homeowner themselves
Yeah.
or with the builder, you can be in serious trouble.
Right. How do people get a hold of you, Clinton? People listening, interested in hearing, or getting more info from you. How do they do that?
They can check us out online at teamclinton.ca/radio. There's hundreds of blog posts on there. There's links to our Spotify, Apple Music. You can hear our podcast, and you can also check us out on social media, on Facebook, on Instagram, on TikTok, wherever you want to consume your social media, we're going to be there.
And Reels.
Oh, Reels on Twitter. We are big in all the types of social media.
Right on.
And they can also shoot me a message. If there's anything you ever want us to talk about on our show, we love getting the feedback back in. And we'll be on City News as well the next time the Bank Canada meets.
Right on. Awesome, Clinton. Thanks so much, my friend.
Thanks for having me.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.